Hey guys, Alessio, hope you're well. In this video, we're going to take a look at this chart you're seeing here, which has some shocking implications for the major markets. In fact, you might be surprised by what this chart is saying about the markets for the next few years. All right guys, join me. All right guys, welcome back. Now before we dig into the charts and what this potentially means for the major markets, let me just tell you where I am. I'm currently making this video in the south of UK. I'm actually in the island of Jersey, which is a beautiful area, by the way. If you have never been to the island of Jersey, I highly recommend it. Only a few weeks ago, as you probably remember, I was in Iran. I was in Tehran in Iran. People always say, oh my God, why do you go to Iran? It's such a dangerous place. Guys, honestly, don't believe that garbage in the mainstream media about how dangerous Iran is. In my view, Tehran and Iran is one of the safest places to go to, and a really great place to have a great time, especially for the spring. And by the way, if you disagree with me and you think Iran is a dangerous place, well, fine. There's nothing wrong with living dangerously. In fact, the philosopher Friedrich Nietzsche, he says in his book, one of his best books, in fact, that if you want to live life fruitfully, if you want to live life to the full, then you need to accept danger. You need to accept some degree of danger if you're going to have a fulfilling life. And I agree with him on that point. Let's dig into the chart, and I want to just walk around here, the island of Jersey, and talk to you about this shocking chart, which has some important implications for the markets and potentially also for Bitcoin as well. As we know, stock markets and Bitcoin are closely correlated. All right, guys, so the chart I want to talk to you about is called the Benner cycle, which was devised by a guy called Samuel Benner in the 19th century. By the way, I want to give credit to Jay Keppel of Sentiment Trader, which is run by the analyst Jason Geppert, and they do some great research. And this chart, which is called the Benner cycle, has some interesting predictions and forecasts for the stock market, especially in the next few years. By the way, as I'm standing here right now, just in front of me is this algae and seaweed. I'm not sure if I actually should walk on this or not, but I'm probably going to avoid it for now, as I'm not quite sure what's under the algae. But anyway, let's get back to this chart and the Benner cycle. So what is the Benner cycle? Well, let's do a bit of history first of all. Samuel Benner was a very wealthy and prosperous farmer back in the 19th century, and he was wiped out. He lost everything in 1873. As a result of losing everything he had, Samuel Benner became interested in market fluctuations, in market cycles. So he did a lot of digging and research to find out what kind of cycles and fluctuations the market has, and he came across a very interesting pattern, which essentially he put into a chart, as you can see here, called the Benner cycle. By the way, just to let you know, this chart was drawn by Samuel Benner over 100 years ago in 1875. And he published this chart in a book. As you can see, his signature is on that chart himself in 1875. All right, guys, essentially what Benner discovered was that the market essentially has two cycles. One larger cycle, we call this the major cycle, which is shown to you in that brownish orange line. We'll call this the major cycle, and there's also a minor cycle, a smaller cycle, shown to you in black. Now, interestingly, the Benner cycle has caught some important tops and bottoms in the market over the last 100 years. Now, I should mention, Jay Keppel of Sentiment Trader does warn that this is not a trading system. It should not be used as buy and sell signals, even though Samuel Benner himself says there when to make money, the times when to make money, which is quite interesting and funny. But it can be used. In fact, Jay Keppel himself says it can be used as a guide. So it's more like a tool which you can add to other important signals you may have, and it can be useful as an extra layer probability which you can add to your existing technical tools. So what exactly is the Benner cycle and how does it work? Let's discuss first of all the major cycles shown to you in the brown lines, the larger cycles. Well, notice, for example, that this particular cycle, and again, I'm not going to go into the formulas of this particular larger cycle at the moment. We don't have time for that right now. But notice in the major cycle, it caught some important tops and bottoms. By the way, one more thing I need to mention here is that the Benner cycle, when it mentions those years you see in that chart, he's talking about the end of those years, the completion of those years. So for example, if you see the year 1999, he does not mean the beginning of 1999, he means the end of that year. So looking at another example, look at the first important top he mentions there. That says 1927, according to the major cycle. So he's saying that we could experience a major downward cycle from the end of 1927 to about 1931. Now, when you think about it, he was almost spot on, because the major crash, the Wall Street crash of 1929, was only 2 years or about a year or so afterwards. So somebody who was following this cycle, if they'd sold in 1927, they would be out of the market from 1927 all the way to 1929, 1930, and 1931. They would have avoided the nasty crash of the Wall Street crash of 1929. So I think he was pretty much spot on there, because they were just about a year or so away from the Great Depression of the 1930s. But more importantly, more recently, notice, again, remember, he devised this chart over 100 years ago, back in the 19th century. He actually saw a major top coming in the year 1999, actually at the end of 1999. As I mentioned before, these dates refer to the end of those years. So notice he was right about the bullish period from 1996 all the way to 1999, and that was during the internet bubble, the dot-com bubble, and the dot-com crash, which came just about a year after 1999 in the year 2000. The stock market, as we know, topped in the year 2000, and then we saw a major crash, an 80% crash in the Nasdaq, not to mention a 50% crash in the S&P 500. His prediction also was right about the major crash we saw at the end of 2019, at the beginning of 2020, the major COVID pandemic crash that occurred in the year 2020. Although you'd probably have missed out on the major rally that occurred after the crash. And by the way, take a look at this castle that's behind me, just a beautiful, amazing castle there. All right, guys, let's continue. Now, what I want to focus in this particular video is the minor cycle, because the minor cycle, those black lines you see on the chart, are actually more relevant to what I want to talk about in this video. So, according to Jay Keppel of Sentiment Trader, there's a specific pattern that Samuel Benner discovered with the market fluctuation of the cycles. So as you can see from this table here, according to Samuel Benner, the market goes through 2 years of a favorable or positive cycle, and then 5 years of a bad period or a negative cycle. Then 4 good years or positive years, followed by 7 years negative. 7 negative years. Then a 3-year positive cycle, followed by a 6-year negative cycle. Anyway, you get the general picture. And that's shown to you by that chart, again, the minor cycles, the black lines on my chart. And here's what's really fascinating and interesting about this. So let's have a look at an early example. That was 1926 to 1931. Again, slightly early than the 1929 crash, but nonetheless, you would have avoided the major depression, the first major crash that we had from 1929 to 1931, to the end of that year. But more recently, notice that he's talking about a bullish period from 1996 to 1999. Then, of course, at the end of 1999, we had the dot-com crash, as we explained. But very interestingly, notice he predicted the major crash of the year 2007, 2008. So again, if you'd sold in the year 2007 or the end of 2007, again, these years refer to the completion of those years, then you would have missed out the major crash of the year 2008 as a result. Now, of course, not every single signal on his chart is correct. In fact, there are some which were not correct. So for example, he was forecasting a top in the year 2016. That's not correct. As a matter of fact, 2016 was a good year for getting into the stock market. But in any case, it seems the majority of his forecast, of Benner's forecasts in this Benner cycle are correct, are actually nearly accurate, almost accurate. Now, what I'm interested in is his forecast for the year 2023, which is, by the way, this year we're in right now as I'm making this video. So as you'll see, he's saying that the completion at the end of this year, 2023, this should be a good period for buying or being long in the stock market. As I mentioned earlier, when it says 2023 there on the chart, he means the completion of this year, at the end of this year. Then it's a good time to be long or be buying into the stock market. So essentially, according to the Benner cycle, from 2023 to 2026, this should be a good period, a positive, favorable period for the stock market, which I think is really interesting and fascinating. And I'll tell you my own views about it. I'll give you my own opinion about it in a few minutes. But let's say the Benner cycle is correct. Let's just give it the benefit of the doubt. And let's say that the market follows the Benner cycle as he devised over 100 years ago, back in 1875. What that means is, if Benner is right, if we follow his cycle, the Benner cycle, that means we could probably see a favorable, positive, and bullish period from the end of 2023, from the completion of 2023 this year, all the way to the completion of 2026. So in other words, if the cycle is right, that 3-year period from 2023, from the end of 2023 to the end of 2026, is likely to be a favorable, positive, bullish period when we should be long. In other words, be in the stock market in that period. And by the way, if that's correct, that means that could be a good period for Bitcoin and crypto as well, because as we know, Bitcoin and crypto is highly correlated, positively correlated to the stock market. Now, let me give you my own thoughts about it, my own opinion about this particular cycle. As I mentioned earlier, this cycle should not be used as a trading system for buy and sell signals. All right, guys, again, as Jay Keppel said, it's merely a guide. It's a tool to be used among other technical tools. But my own feeling is that he is right about this particular period. Now, I don't know about all the way to 2026, but I think he is right that 2023 is likely to be a good period. Now, if we follow his strict analysis, his strict interpretation, we would have to wait until the end of this year, the end of 2023, for being long or bullish on the stock market. Personally, I think it's going to start earlier, as I've been saying now for the last several months. Again, if you've been following our member videos and our earlier videos, then as you probably saw, I've been bullish on the stock market pretty much from the start of this year, from January of this year. So personally, I think Benner is he's calling for a much later period, for a bullish period for the stock market. I'm actually getting in a bit earlier on that one. I think the bullish period is going to start, I think it started already. I think the positive period for the stock market began pretty much from January this year. So again, just to repeat this point, I think Benner is correct that the period of 2023 for the next few years is going to be a bullish period for the stock market. I think we could see much higher prices and levels for the S&P 500 and the major stock markets. Provided the S&P, I think provided the markets stay above the lows, I think that's a much higher probability. Of course, I could be wrong. Nevertheless, that's my view. However, as for his prediction that the market could top in the year 2026, I think that's correct, but I actually think the market could top and start the bear market sooner than 2026 or before the end of 2026. Again, if you follow the strict interpretation of the Benner cycle, he's saying, Benner was saying that the market could top at the end of 2026. Personally, my view is, again, my humble opinion is that I think the market could top, the stock market could top perhaps before 2026, maybe in the next couple of years. I don't think it's going to top this year. I don't think we're going to see a top this year in 2023. I think it's more likely the market will top sometime at the end of next year in 2024 and perhaps in 2025. So that's where I might disagree with Benner on this point. But again, remember, he was making this chart over 100 years ago, back in 1875. So you got to give him some credit at the very least. You have to appreciate he did not have a crystal ball. He was simply following market patterns and fluctuations. Now, again, just to mention what I said earlier and what Jay Keppel said, this is not to be used strictly as buy or sell signals or as a system on its own. We should combine this with other technical methods. So for example, if we see a bearish period, if we see some major drops, we could use this cycle, we could use this Benner cycle to add an extra layer of probability. Similarly, if we see a very powerful move, if we see a powerful move to the upside or a major rally this year in 2023 or next year in 2024, that could also support this particular cycle, this Benner cycle. So in other words, I'm using this Benner cycle not on its own, but an extra degree of probability. It's an extra tool with my existing tools. And by the way, one final word to say about this Benner cycle. Let me just go back to the chart and look at it again. Notice that he's saying that this bearish period, this bear market, which could start from 2026 or the end of 2026, will eventually finish in 2032. In other words, this bear market, if he is right, could last 6 years. In other words, pretty much towards the end of this decade. It's going to be a very horrible bearish period, a negative period for the stock markets, if indeed the Benner cycle is right. By the way, I do think he is right about this. I do think that the next bear market is going to start in the next few years is going to last several years. It's not going to be a short-term thing. This bear market is going to last for several years, at least at the end of this decade. So I do think Benner is right about that as well. All right, guys, I hope this video has helped you in some way. Let me know your own thoughts. What do you think about this Benner cycle? Do you think you agree with it or do you disagree with it? And if so, why? Give me your own thoughts in the comment section. I'll be interested to read your comments. All right, guys, so from here in Jersey, I want to wish you a fantastic week and look forward to seeing the next video update. Cheers. Bye.